Hello everyone, my name is ATP and welcome to the very first episode of our new testing strategy series. In this series, instead of just analyzing individual indicators, like in our testing indicator series, we'll be testing complete trading strategies suggested by you. Not only will I show you how each strategy works, but I will also test them across multiple markets and time frames, presenting you with accurate and impartial results. If you are new here, don't forget to subscribe and let's get started. Today's strategy was suggested by our subscriber Kenneth. So, a big thanks to you for sharing this with us. This strategy seems to be very strong, and so I'm very excited to see how it performs. To start, let's add all necessary indicators to our TradingView charts. First, we have the main indicator, the Indian oscillator, this one here, with the settings 51 for the length and 9 for the signal, which is going to be the trigger indicator for this strategy, so the indicator that gives us the buy and sell signals. By definition, the Indian oscillator aims to measure the degree of variations of individual uptrends and downtrends in the price. Basically, when this green line, which is the bullish line, crosses above the orange one, which is the signal line, it means it can be a good opportunity to enter in a buy position. And when the red line, which is the bearish line, crosses above the signal line, it can be a good time to enter in a short position. Alongside, we'll add the Zurich filtered case permission stochastic, this one here, with the default settings, which is used as a filter indicator. This indicator is an advanced trading tool that combines multiple elements to enhance the accuracy of the stochastic signals. And so, its function is very simple. Eliminate fake signals from the trigger indicator. And how? You will only consider buy signals when the Zurich filtered case permission stochastics line is green, and you will only consider sell signals when this line is red. Next, the subscriber gave us the exit indicator, which is the purple cloud with the default settings. The purple cloud we used is not available on TradingView, but you can access my Discord community, the link is on the description, go to the free materials channel and there you can find the code. The purple cloud is a trend indicator calculated based on exponential and simple moving averages with different weights and give us these signals on the charts. For this strategy, this indicator has an exit function, which means that in a long position, if the purple cloud gives a sell signal, we will exit from the trade. And if in a short position the purple cloud gives us a buy signal, we will close that trade as well. Then we need to add a volume indicator, the volatility ratio, with the default settings. As the name suggests, it measures market volatility and serves to identify periods of sufficient volume for trades. So, we will only take a trade when the volatility ratio line is above this level. Lastly, we will add a baseline indicator, a 50-period exponential moving average. This will help us align trades with a major market trend, further reducing false signals. With everything in place, here is an example of a valid buy setup. The Indian oscillator gives a buy signal, the Zurich stochastic line is green, the volatility ratio is above the required level, and the price is above the 50-period EMA. We will exit the position when the purple cloud gives a sell signal. Likewise, for a sell setup, the Indian oscillator gives a sell signal, the Zurich stochastic line is red, the volatility ratio is high enough, and the price is below the 50-period EMA. And we close the trade upon a buy signal from the purple cloud. Regarding the stop loss and take profit management, I will also follow these exact rules, using a trailing stop loss. If you are unfamiliar with this approach, check out this detailed video on my channel. Also, although the subscriber suggested this strategy specifically for forex, I will test it across different markets to assess its robustness and adaptability. For this series, I will take a comprehensive approach to the testing setup. I will be analyzing this strategy on 7 different time frames: 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours and daily. Regarding the trading assets, we are going to test the strategy on 5 different ones: Bitcoin from the crypto market, Euro USD from forex, gold from commodities, Apple from stocks, and the S&P 500 index from equities. By covering such an expansive range of assets and timeframes, we'll get a solid view of the strategy's robustness and performance across several scenarios. Regarding data, I won't limit the dataset. Instead, I will use all available historical data on TradingView for each asset and time frame, ensuring we gather the largest possible sample size. With everything in place, it's time to begin the backtest. To speed up the process, I will use my premium indicators testing bot, a tool that allows me to test thousands of strategies quickly and effectively, providing real results. With it, I can define all these indicators with the respective functions, along with many other options. If you are interested in using this tool for your own testing, you can find more details on my website at algotradepro.com. Once we have set all the conditions, the trading bot will execute every valid trade on the charts with a respective entry point, stop loss, and exit point. Also, you will see the monthly results displayed along with overall statistics for each asset in the Strategy Tester tab. Since I have the premium TradingView plan, I can download all the trades the bot executes, which I will use to create my trading journals with all the information about this strategy. I will speed up this part, but feel free to slow down the video if you would like to catch each detail. I will see you in a few moments. After running the backtest, I have compiled the data into my trading journal where we can evaluate the performance of each time frame. Starting with the lower ones, the 1 minute, 5 minutes and 15 minutes, we can see that the results were inefficient. You can pause the video to check every single detail, or by looking at the equity charts, you can easily draw your conclusions. Next, in the 30-minute time frame, the results were quite positive. With a win rate of 56.68% and a net profit of 123%, the strategy achieved profitable results on every asset, and the equity chart looks very stable. It had this flat period here, but the max drawdown was only about 20%, which is acceptable taking into consideration the final net profit. On the 1 hour time frame, the results were profitable as well, but not as efficient, because the win rate was a bit lower and the drawdowns were higher. Here you have the results of every asset and the final equity chart. The same happened on the 4 hour chart, as you can see, and on the daily one, the results were lower but steady. So, according to these results, it seems like the 30-minute time frame can be a good one to apply this strategy to achieve consistent and profitable results. Of course, remember, this testing series is all about impartial analysis. I'm not here to judge if a strategy is good or bad, but rather to present its real-world performance across different market conditions. The performance could vary significantly if you change the conditions or even the settings, so please always test your strategies before putting them into practice. If you want to see your strategy tested in a future episode, just leave a comment with a full setup or share it on our free Discord community. And that's it for today's first episode of our new testing strategy series. Thank you for watching, and if you enjoyed this video, please give it a thumbs up and consider subscribing for more strategy and indicator tests like this one. I will see you in the next episode. Bye bye.